It's the new year, and a lot of people are searching for new investments. And we have this one amazing asset that we'd like to talk about today, which is a Nifty 50 Value 20. I think a lot of people might be hearing this for the first time, but it's a great thing to discuss. We promised this in the last podcast. Let's
Exactly.
get
Nihaal
into it.
said we'll come up with an investment which is even better than Nifty 50 investing.
Yeah.
So let's talk about it. And as you know, I'm super excited about this story. I'm personally very bullish on this. And I think even a lot of my personal investment will go into what we are going to talk about now.
I mean, like Nifty 50 has been the OG go-to investment strategy for so many people and investors. And we've been hearing about Nifty 50 investment. It is the benchmark to hit. And even when mutual funds try to bring out a large cap mutual fund, their only aim is to beat Nifty 50.
Now, what if I say there is an index available created by NSE, which is investing into top 20 companies among Nifty 50, which means that they are investing again into blue chip companies only and has given better returns than Nifty. And when I say better returns in the last 10 years, CAGR of 19.9%.
That's crazy, right?
Absolute. So higher returns than Nifty with less beta, which means that less standard deviation than Nifty, which means that lesser risk than Nifty and much higher returns. Nifty returns is 13.5% CAGR on 10 years, and what the index I'm talking about has given 19.9% CAGR over last 10 years, again by investing into Nifty 50 stocks. So I'm super excited. That's why I'm talking about this multiple times. And the name of the index is Nifty 50 Value 20. And this is an index created by NSE only.
Yeah.
It's an index just like Nifty. I mean, think about it. I'm super
And this
excited.
is nothing but a strategic index, is what I believe.
Yeah, these are called strategy indices, right? And this is just one among the strategy indices. There are multiple among them. And when I speak about Nifty 50 Value 20 as an index, you can actually invest into it via mutual funds. We just spoke about it in the last story as well, right? There is a mutual fund available from Nippon, which is again a very famous AMC. Nippon has a mutual fund which tracks this index, which means you can put money into this index by investing into that mutual fund, and you get higher returns than Nifty by investing into Nifty 50 stocks only with lesser risk. Man, this sounds like a magical opportunity.
It is a refined version of the Nifty 50 blue chip OG benchmark. It is a refined version of it.
Yeah.
But again, maybe we can even talk about what is even a strategy index or how is it formed. Maybe we can just talk even about that.
Yeah, so strategy indices, as the name suggests, are based on certain factors or strategies. So let's take an example. So NSE has defined multiple factors. Let's take the example Sharique was saying now, which is value. You had the word value in it, right? Similarly, they have multiple other strategies, momentum, they have alpha, they have even low volatility. So all these are factors with which they mix and match all of these factors and come out with something which is called as a strategy index.
Yeah, I mean, if you think...
And in India, today, there are 44 strategy indices. I'm sure a lot of people don't even know about this. So it's high time.
Exactly. So that's where, if you think about it, NSE is an exchange and it has a lot of indices. So normally we as traders, we are very... investors definitely look into Nifty alone, and traders look into Nifty, Bank Nifty,
Nifty,
Mid-Cap Nifty. So all of those are broad market indices. So NSE has broad market indices. They have thematic indices. They have sectoral indices. We all speak about them as well. Then there is strategy indices as well, which is very less talked about. And that's why I think a lot more people should talk about it. And we definitely are talking about it today, right?
Absolutely.
But again, giving more clarity or definition on what a strategy index is. If you think about it, Nifty 50 is also a strategy of sorts.
It itself is a strategy.
Exactly. Just like that, strategy indices also have certain rules. And each strategy index would have rules of its own, and it will rebalance looking into the rules, and that is what the index is. Now, we anyways talked about Nifty 50 Value 20. Let's understand rules of Nifty 50 Value 20. I hope that will definitely help. Right? So Nifty 50 Value 20 is saying that Nifty 50 is my universe. That's rule number one. That is, every time when I am rebalancing, I will not look into entirety of NSE stocks. I'll only look into the top 50 stocks. And in the top 50 stocks itself, I'll rank them on the basis of certain value factors. Like you said, these are strategy indices are based on factor investing. So there are certain values they try to optimize for, like value, quality, momentum. So this is Nifty 50 Value 20. So they'll try to optimize for value. So top 20 value companies among Nifty 50 as a universe. Now, how are they deciding value? This is also given by NSE on their website, on their fact sheet. they are looking for companies with high ROCE, return on capital employed, low PE ratio, low PB ratio, and high dividend yield. I mean, we always talk about these as good ratios to value a company. Now, based on these rules, rebalance is done once in a year. That is annually. So, annually, NSE will look into Nifty 50 as a universe, and among these 50 stocks, which are the 20 stocks ranking high on these, and that is the basket of 20 stocks, and that is what Nifty 50 Value 20 is. As simple as that. It's a rule, it's a strategy, it's an index, and then you can invest into it via mutual funds. So it's rule-based investing of sorts, and amazing, right?
So that magic index has higher CAGR. It also has a lower beta value, which means that it is less volatile than Nifty. It has a beta of 0.8. Similarly, it also has a lower standard deviation, as Sharique had said, 17 versus 19 for Nifty, right? Just giving the numbers without decimals here, but hope you get the point. An amazing index, or let's say Nifty 50 on one side, which is already people are saying it's an amazing index.
Because it is diversified, top companies of the stock market in India. And if India is developing, then these companies will also do good. It will get rebalanced over time.
Exactly. So Nifty 50, amazing index, great returns, and on the other side, a better variation of Nifty 50, which has much better metrics than it, right?
Correct.
So I think every single person should be looking into what are strategy indices and trying to learn about, like we just talked about one, right? We just gave this as an example because we thought it will be the easiest for people to relate to who already understand Nifty 50. Now, when I said earlier, there are 44 strategy indices, right? So you can mix and match what you as a person want, and I'm sure you'll be able to find it in the NSE website.
But guys, again, we have been talking about the large cap investment alternative. But again, we also have to give our viewers a mid cap and small cap alternative. So that is where I would like to bring up this another interesting strategy index that we found, which is Nifty Alpha 50. While Nifty has been giving 13-14% returns, we all know mid caps and small caps also were giving somewhere around 16 to 20% odd. But this Nifty Alpha 50 strategy index from its inception, which is 2012, has given over 22% CAGR.
I mean, it's a high risk, high return sort of an index. 22% CAGR over the last 10-12 years is crazy. I mean, it's amazing. It has beaten your mid cap, small cap, as you rightly said. But that's where I like to bring our attention to one very interesting data which is available. That is in the last calendar year. If you see 2024, if you take all the mutual funds in India, Nifty Alpha 50 as an index, or the mutual funds tracking that index, perform better than 90% of all active funds. All active funds is all your managed large cap fund, flexi cap fund, multi cap fund, small cap fund. Everything, if you put together as a list, Nifty Alpha 50, which is a passive index, it beat 90% of them. I mean, that's crazy, right?
Absolutely.
I mean, you're talking about investing into a rule-based strategic index and making higher returns than mutual funds, which are being actively managed by fund managers and expert teams sitting somewhere. I mean, that is crazy.
True, very true. And like rightly you said, right? This is also again a rule-based strategy index. And what does the rules are? What are the rules mentioned is, see the name, right? Nifty Alpha 50. So what this rules say, or what do this strategy follows is, they'll see the top 300 free float market capitalization companies, and then they will see which stocks among these 300 stocks has the highest alpha. What is alpha? Whatever is outperforming the index by the highest number. So that they are going to see, and they are going to look at this 300 highest market cap companies, which are again very good blue chip companies anyway would come across. In that, what are the 50 stocks which have outperformed the index by a huge margin? And then they are going to invest in that stocks. Very simple, very plain, rule-based, systematic trading.
So those are the rules of Nifty Alpha 50 as an index. And I'll just add on to the fact that this is a fund which is quarterly rebalanced. So every 3 months, NSE looks into top 300 companies. That's the universe, and apply these rules, and whichever are the companies, then that is what is present in the index. And I love this fund so much. I'm actively thinking about putting a lot of money here, and because it's not just me, right? I mean, even you and a lot of viewers also have. when you are creating your portfolio, there is some allocation for large cap companies, and then or large cap mutual funds for that matter. Then there is some allocation for small cap and mid cap mutual funds as well, because you are ready to take some more risk for that higher return.
Yeah.
And that is why I love this index so much, Nifty Alpha 50 so much, because in the last 5 years, when you talk about this crazy bull run in small cap and mid cap, where CAGR returns of small cap and mid cap has been 25 to 28% over the last 5 years.
Yeah.
Nifty Alpha 50 at near 35% CAGR. I mean, the kind of alpha it is creating even over Nifty small cap and mid cap itself is unreal. So if someone's looking for having that part of your portfolio, which is where you're willing to take higher risk for higher returns, Nifty Alpha 50 is your guy.
And
Yeah,
our
so-
viewers also has to understand that whatever these 300 stocks are would come under mid caps. So they're not even small caps technically.
Yeah.
So that is amazing place
But
to
now
be.
when I just hear me back as what I just said, I mean, this should never be taken as an investment advice. This is definitely, I'm going back to what Ajay said before. Right? I'm not saying this is the best index. And again, going back to the fact that there are like 44 strategy indices available. So there could even be better ones. And I really want them to go out and learn more about them for sure. But these are two interesting strategy indices for sure. But yeah.
While strategy indices are looking good, there could be some downside or some pitfalls that can come. What do you think they could be?
Yeah, so the first thing is you can't directly invest into a strategy or any index, right? You can't go ahead and buy Nifty 50. You have to buy it through either an index fund or through an ETF. And the major problem here is there are very less number of mutual funds available for these strategy indices. That's a sad thing to see. And because there are very less funds and there is no awareness, there is also lower AUM and there is a lot of tracking error. So whenever you're investing into any index fund, you want to know what's the tracking error. How closely is this mutual fund tracking the index? And it is slightly higher here is something that we have noticed, but maybe that will smooth out over the long term.
Correct. When we say NSE is putting out a 10-year CAGR of 22% for Nifty Alpha 50 as an index, a mutual fund tracking it or mutual fund which is tracking this index, letting you invest into this index might not or could not really give you that same 22% over 10 years because of what Ajay just
The
said, which is
tracking errors.
tracking error.
But,
And that's normal for...
And it's normal, and
But it
it's
is higher.
Not, it's higher,
Yeah.
but it's not huge. It's not like 5 or 6%. It's maybe from what we observed, 1 to 1.5%, not more than that. So it is not significant enough for you to not consider strategy indices at all. It's still a great thing to look at, study about, and if interesting, and if you find the right mutual funds, then I would say it's a
again,
good look.
going back to Nifty Alpha 50 is, I think there's just one mutual fund offering it right now, and that also just started 1 year ago, and that is from the AMC of Bandhan as well. So I get Ajay's point where the number of mutual funds are less. It's very the ecosystem itself is in a very nascent stage.
So, I mean, we can even summarize it and say how strategic indices are helpful for investors.
I mean, let it be newbie investors or even experienced investors definitely should be considering strategy indices in their investment portfolio. I mean, think about it. NSE is backtesting an investment strategy for you, giving you the backtested metrics on NSE's website. You can go to NSE's website and download the fact sheet of all these strategy indices. You get the past 10, 15, 20 years of data, how this performed. And you can, with confidence, invest into mutual funds knowing what is the kind of returns this has delivered. So, depending on who you are as an investor and what your aspirations are, there are multiple strategy indices available. If you want high risk, high return, you have strategy indices for that. If you want low risk and low return, with bluest of the blue chip companies, you have strategy indices for that as well. So I think a really great instrument that anyone can consider as part of their investment portfolio.
Yeah, and since NSE is creating these indices, any mutual funds tracking them will be considered as passive mutual funds, and by design, their expense ratios will be lower.
Correct.
And I just hope like how new investors are showing interest in thematic funds and new NFOs are coming in this segment. I hope these strategy indices also become very popular with our podcast again. And we hope new NFOs actually come in this segment, and then we would like to invest as well.
Right, I'm definitely looking forward to it. A lot of very, very interesting strategy indices, even more than the ones we talked about in the podcast today. So, where mutual funds are not even available. So, NFOs will have to come here. Like we mentioned in story 1, right? I mean, where NFOs, one advantage of NFO is this only, right?
Yeah.
Where I like a strategy index, but I cannot invest into that strategy index today because no AMC is maintaining a mutual fund on that. So I hope some AMC is coming up with a really good mutual fund on a strategy index I like.
Definitely.
But that is where I think another disadvantage we talked about, NFO is also getting taken care of. You mentioned, right? I mean,
Yeah.
with an NFO, that fund does not have a track record.
Yeah.
But if NFO is for a strategy index, then it has a track record.
So it has both the back test as well as a forward test.
Correct.
So some of these indices have been clearly giving a forward tested data since even 2012 or even earlier,
Yeah.
right? So back test is there from around the year 2002 and then forward tests are there from the year 2012. So amazing place to be. So I would say fund houses, if anyone from any fund house is watching this, please make 2025 the year of strategy indices. We are talking about this with a lot of passion, with that hope in you. Make this the trend.
14,000 crores going into thematic and sectoral funds. Let's hear about similar thousands of crores going into strategy indices as well. Yeah.
So there is this common quote: give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime.
Yeah.
And that's what I would like to do here. So how do you find these indices? How do you find these mutual funds? That's what I want to discuss. Very crucial for strategy indices. So go to niftyindices.com. It's an official website by NSE. You can go there, click on the indices button on the top, then click on strategy indices. Here you'll be able to see all the 44 amazing strategy indices which are available in the Indian market as of today. And from that, once you click on any strategy index, you'll be able to see which all AMCs are offering either an ETF or a mutual fund there. And I would ask you to go for the mutual fund route. So if you see that the mutual fund is available, then great. Try to learn more about the strategy index by going into the fact sheet and getting to really know about the numbers, the reason why that strategy or that index exists. And I think that could be the start of an amazing 2025 for all of our viewers.
Yeah, and just doubling down on that fact sheet part. So you go into the strategy index page and download the fact sheet. The entire magic, the numbers, whatever we talked about here is available in the fact sheet. For example, Nifty Alpha 50, if you download the fact sheet, there you can see the rules, the universe, what rules based is, how it is created, what is the rebalancing timeline present there, and what are the current stocks in the index as of December 31. That's what you see if you try it today. And also it's CAGR return since inception, last 5 years, 3 years, all numbers, all metrics that you would love to know is available.
So
there.
one tough thing here, as I mentioned earlier, was it's hard to find mutual funds, right? And even if there are mutual funds, the AUM is low, which I don't think is a concern. But the fact is, it's hard to find mutual funds. But if I want to feed the fish to the person that is the audience, I would like to, I'll be uploading a template, an Excel sheet in the description for all of you to go
Ajay
check
for
out.
the win.
So under which all strategy indices, which all mutual funds are available, and you can easily sort through them. You don't need to go open it one by one.
Then you can go to your favorite mutual fund platform, easily look into it, see the performance of the mutual fund as well. And that's where you can continue.
So because Nifty is so popular, they are forced to give out mutual funds for that. But again, I would love to request these mutual funds to be a bit more open and maybe even new players to come in, like maybe Zerodha's
Exactly,
AMC.
I was going to mention that. Zerodha AMC's the entire thesis, the philosophy is to make passive investing cool, passive investing popular, and they would probably do this.
Please tag Nitin Kamath in Twitter and let him know about how MarketFeed has asked you to create or create strategy in these mutual funds.
Absolutely.